Hi, Chris Duff over at Serious Land Capital, vacant land funding partner. Today wanted to go over some tax-related items. I know it's everybody's favorite topic, but, given tax season is, effectively right now or right around the corner, depending on how early you act on things, definitely a few notes worth mentioning. So our CPA just went over or, sent us back all of our various K1s and individual state tax filings to also send in. We did the most business across the country with tons of different states, I think 10 plus, 2024, effectively meaning we were much more spread out geographically compared to how we've operated our business in the past. Our CPA, who we've worked with for many, many years, that increased the total fees owed to them, nearly double from on average $3,000. And we keep very, very good records internally. Normally, we try to make it as easy as possible from an accounting perspective to send to our CPA. But given all the individual state filings, it effectively doubled the cost just to prepare the taxes for our LLC. And there were a number of states that also require signatures from a managing member of our LLC and paper filings to be sent to certain state departments, and potentially even checks, physical checks associated, that can't be electronically sent or just auto debited from our business checking account. So it definitely adds some, admin complexity for some of this. And notably, as well as that, we only maintain a core Delaware LLC, and we don't file as a foreign qualification LLC in other states that we operate in. There's a number of times we've tried to start working with the title company, and they're like, "Hey, you need a foreign qual," and we always push back on that. Or worst case, just go to another title company versus having to pay $1,000 on average for different states to get a foreign qual. And we've been operating in this business for 5+ years at this point, and we've never had to go through a foreign qual. There's always been a workaround each and every time that deserves its own podcast in and of itself. But when you don't do that, it can introduce kind of legal complexities with the state revenue departments. And so our CPA was kind of managing, some nasty letters that were sent to us. Hey, your LLC is not registered to do business. And so, we're asking for extra fees and so forth. And so, we had extensive conversations with our CPA, and it seems generally that it's a situation where it's probably going to be cheaper to just ask for forgiveness versus go through the whole permission process. And so that's still our current game plan at the moment. If we have a little bit of light fees here and there to take care of, or maybe we can note, hey, which states are more draconian, or, throw a bigger fit about our participating within their state's economy and, not being fully registered, then, we can consider, is this worth getting a foreign qual in this particular state? And, that's always a decision we can make at the time of actually pursuing another deal within a subsequent tax year. So it's not like we have to jump on it immediately because we got, a nasty letter here or there. Since setting up a foreign qual is such, usually a sub-week long process. And if it ends up we don't do another deal in a certain year, then we can just skip that process. But there, besides some of the admin complexity and extra fees for our tax prep, we had to also account for a pretty significant, amount of extra just state taxes that were going to have to be debited out from our account, either electronically or sent in via paper forms. And some of these, depending on the total deals that we were doing, and the way the state was calculating the taxes, most of these taxes were between like $300 to $1,000 on average. You multiply that across 10 plus states, like it's not an insignificant amount of money that has to kind of go all out all at once, impacting overhead on top of what we're having to pay through pass-through taxes via the LLC just for federal returns. And as anybody can tell you, land business, this is short-term ordinary income, unless you're matching it up with other real estate assets that have depreciation or long-term cap gains and so forth, or you operate your land business on a long-term cap gain schedule, year plus holds. It's not routinely something that's pursued. Usually that would just be if something went terribly wrong. I don't think we've ever held an asset longer than 12 months, and only a handful of assets ever longer than 9 months. So for the solid returns, very, very solid returns you can get in this industry, your tax burden's naturally going to be higher. So you have to find other creative routes for how can I, deduct more and have less of a tax burden. Nevertheless, I would rather have a much more successful business earning significant profits and have to eat the taxes versus the opposite. So it's kind of a champagne problem, as they call it. But, as far as how we would structure this going forward, given that we now know a lot of the individual states' requirements and exact calculations, how they handle state taxes, we could start building that into our assumptions, both on a buy price perspective. And, again, some of these are a little bit minor. And it depends, right? Like, do we do one deal a year, two deals a year? But, you can start breaking down just the anticipated percentage of profits that are going to be taxable for certain properties. So you can make reasonable estimates on what that number might be, at the time of acquisition, or, we can also consider, building that into the waterfall with the investors who work with us. So the tax burden is split on a pro rata basis, because right now, as of last year, we're eating all of those state taxes from 2024 just out of our own overhead versus having it within the waterfall. So that's another thing that we'll be exploring. And again, it's relatively minor for most properties, but when you have to eat them all at once, it's a more significant burden from an overhead perspective. Like, doesn't break the model, certainly, but it's certainly a risk to operating within this industry. So we're just going to have a bit of a better strategy going forward, but it's growing pains. Would rather have these pains versus, again, being stuck or not making money. And just given our ability to underwrite across the country effectively, like, I don't want to limit ourselves by just saying, hey, we're only going to focus on one or two geographies, one or two states. We've had a lot of success really all across the country. So, not planning on stopping that anytime soon, just to, from the sake of like a tax burden perspective, like that would just be kind of a poor choice, in my opinion. But yeah, just wanted to share some thoughts and recent updates in regard to that topic. If you all have any thoughts on that, please let me know. Otherwise, we will just keep things rolling here. But if you're looking for funding, seriousland.capital, Land Daily Diligence Facebook group for zero cost review of your land deals, and landpricer.ai for the most simple and accurate way to price land. See you next time. Subscribe and share. Thanks.